Welcome back to our third and final session, which we're going to look at AML and KYC compliance in a shifting digital world. And Russell E. Perry, the CEO and founder of Kompany, is going to give us a keynote presentation. Immediately after Russell's presentation, we're going to have a panel discussion where we're going to look at adopting digital transformation strategies during and after the pandemic. With no further ado, I will hand over to Russell to take us through his presentation. Russell.
Good. Well, thank you very much for the kind introduction. Hello, everybody. My name is Russell Perry. I'm the founder and CEO of Kompany. That's Kompany with a K. And I would like to give you a little bit of an insight on anti-money laundering, know your customer, and KYB compliance in connection with digital world and moving to e-KYC solutions. If I may, just give you a little bit of an overview of what does Kompany do. Well, we're a regulatory technology company, a RegTech company, and we're focusing on the verification of companies and the people behind the companies. So it's commonly also known as KYB, Know Your Business. We're located here in Austria, headquartered in Vienna, founded back in 2012. And we are focusing not only on the European Union, but all of our services are available across the world, and we have clients on 4 continents from more than 100 countries. The team is about 60 people today, and we have offices also in the UK, in North America, New York to be specific, and also in the APAC region. And when we look at the overall compliance world, and specifically anti-money laundering, a lot of you have already been or had contact with AML regulations or compliance requests, either from your banks or maybe from the mobile operators, and heavily, of course, and increasingly in the digital world with digital assets, digital exchanges, etc. And anti-money laundering is generally an expanding regulation, right? And it is led today mainly by the European Union. Other countries, other regions are catching up very, very quickly. So there's a lot of money being spent on managing compliance, on managing anti-money laundering compliance. At the same time, a lot of the regulators are imposing very high fines that are now totaling more than $150 billion, right? And the question is, why is that happening? Well, when we talk about AML, when we talk about KYC and compliance, the focus over the past years has been on how to create a digital workflow, solutions moving from the manual processes to a digital solution. At the same time, though, there is also the need to look at the data that is used. How do you know a company exists? How do you know if the managing directors are not on the PEP, politically exposed persons, or sanctions list? In what jurisdiction is that entity? And who are the shareholders? And there are massive data gaps. And I'm going to go a little bit more into detail there, where these data gaps are coming from. At the same time, the fines that are being imposed by regulators are now much higher than the cost of actually being compliant. So there is really a large potential in an automation, in bringing in digital services and making sure that a higher level of anti-money laundering compliance can be reached. And today, when we talk about AML compliance, specifically for KYB, there are 3 trends. One, I already mentioned that briefly, is automating that process. And overall, if we look at the financial institutions specifically, only about 5% of financial institutions worldwide have actually implemented a corporate customer onboarding solution in a digital form. Have also not only automated, but also provided a higher level of onboarding solutions to their clients, be it small and medium-sized businesses or be it large corporates. The second very significant trend is this move to primary source company data. What does that mean? What is primary source company data? Well, it is information, it is data, company data that has a high veracity, data that you can trust, and where there's also enforcement of that data, of the filing. So typically, these are commercial registers, financial authorities, or banking authorities who provide information on the market players, those that are licensed, those that are registered, but considered as a primary source, meaning this is the highest level of veracity and trusted data. The third trend that we're seeing in AML compliance for KYB is moving away from periodic reviews. So instead of just checking once a year or maybe every 3 years, it's about always knowing the status and the changes of businesses, meaning ongoing monitoring. And the automation is essential, right? The worst thing that a financial institution or a fintech will be struggling with is this backlog, needing to check clients, taking a lot of time to activate the clients, get the accounts open, right? And the backlogs are very, very inefficient. That means if you're looking at onboarding your clients and you have a manual process, then you're always going to be behind, frustrating your clients, frustrating your new customers, but also creating a lot of friction within your organization because you're always working against the backlog instead of servicing your clients. And automation covers a lot of areas, right? When we talk about KYB, it can be the digital onboarding, like I said, account opening, general back office automation, where you're also capturing additional information of directors and officers. You have the ongoing monitoring, you have AML screening, making sure that it's also compliant with regulation, and other services that help reduce that friction for clients. At the same time, of course, it's all about how can you be more efficient? Can you save money by going the digital route? And yes, you can. Typically, you'll see a 50% reduction in the first month, right, in the costs. And the move to what we like to call the good data, so meaning company information from primary sources, really helps achieve a much higher level of compliance, at the same time reducing the risk of penalties and fines. Let me do a deep dive here. So the emphasis and the focus on the good data, so primary source data, is really growing. I would like to take the example of the European Union, because as I mentioned, they're at the forefront of anti-money laundering regulation. And before 2017, the EU's requirements were quite low, similar to other jurisdictions. It was if you were able to identify or have any company information, that was good enough. But that changed with the fourth anti-money laundering directive back in 2017, because here there were clear rules on what is required, what does it mean to verify companies and the people behind, and also there was the requirement to set this up with documentary evidence, meaning how did you check the entity based on what information, and ensure that you can have an audit-proof capture of the data and the information that you used. But that really wasn't enough, because it left a lot of loopholes, right? Especially when you looked at the risk-based approach. Say, well, we couldn't find anything else. We used Google, couldn't find anything. But Google really, or a search engine, is not really the solution if you want to fulfill anti-money laundering. It's good for information, but it's not really that good if you're trying to verify and capture that information in an audit-proof way, right? So the fifth anti-money laundering directive changed a few things and focused on the data, and data matters. And for the first time, there was a very clear message, regulation stating that you must use regulated, recognized, approved, or accepted relevant national authority information, right? So this is very broad in the definition. At the same time, it's very specific, right? It's almost like an oxymoron. But the documentary evidence part has been a challenge for many, not just service providers, but also financial institutions, fintechs, payment service providers, insurance companies, etc., who are now or needed to start looking at, well, what data are we actually using to comply with the law? And this has gone on now also an increase to 2021, where it has become even more critical to look at the data. And not only that, it's not only in the European Union, the US, just in the last 9 months, is trying to catch up with the EU and has imposed 3 new anti-money laundering regulation, which are far-reaching. And when we're talking about periodic and perpetual KYB, I mentioned a few things there already. But how do you make sure that you know what is happening today? How do you know if the company that's your client has a new managing director, has changed address? Maybe the shareholders have changed. Can you wait 3 months? Can you wait 6 months? Can you wait until there's an annual report that's filed maybe 9 months after the closing of the books to know that? What's the risk exposure? But even more importantly, what is the exposure to non-compliancy? And this is where achieving perpetual KYB, so perpetual know your business, meaning you have active monitoring, is really the solution. And also it is possible today with technology to make sure that when there is a change of your clients in their status, in the managing directors, in the shareholders, or the zip code for that matter, because they've relocated, you can know today. And based on that, you can also initiate your KYB checklist. Do you have to do a full review, or do you just have to change the address, for example? And the biggest benefit here is that from an FI's or financial institution perspective, you don't have a backlog anymore. Your data is always up to date, and it fulfills the audit proof requirements. And even better, you're creating this audit trail. Something changed today, something continues to change. You'll always know that something has changed. You can protocol that, and you can go back through the entire customer life cycle of your clients to make sure, to record and review what information did you base what on. And the stakes overall are very high. And I would like to go away from the technology side a little bit and just also talk about, anti-money laundering overall. Is it a burden? Is it a burden on business? Does it, inhibit, economic activity? Well, actually, it doesn't. It's quite the opposite. So if we look at the societal costs of anti-money laundering, they start with, undermining just the integrity of the economy. You have a lower tax base. There's social services that can't be funded. You also have a general loss of economic control and stability, meaning also that, for example, small and medium-sized enterprises very heavily have, not the same playing field as those that are not playing by the rules. You also have risks. Could be, reputational risks. If you look at the news, a lot of financial institutions have a lot of money laundering problems. And that is a reputational risk too. Do you still want to do business with a financial institution that is in the headlines every month for money laundering? Well, it's up to you. From my side, most likely not. And if you look at the overall social fabric and also additional, I wouldn't say costs, but the negative impact of money laundering, it starts, with human trafficking and continues into illicit activities, which again undermine the integrity not just of the economy, but of the society. And this is where technology combined with efforts from all the players in the economy, but also from the regulator side, we can reduce the societal costs and the negative impact that money laundering obviously creates in our countries, in our regions, and also in the economic areas and blocks. Well, Thank you very much, everybody. I hope that I could give you a good insight into AML and KYB, how RegTech also enables not just the financial institutions, but generally plays a very, very important part and can play a very, very important part in our economy. Thank you. And if you have any questions, obviously happy to answer these.
Thank you so much, Russell, for that presentation. We're going to our panel discussion now. I don't think there are any questions. If there are questions, you can just ask. I think Russell will be able to answer those questions. I think it's still around. But now we're going to go straight to our panel discussion. We're not going to take a break because we're running behind schedule. So the next panel discussion is about digital transformation post-COVID. The one who's going to lead that discussion is Akhona Bashe. She's the head of Fintech integration at Liberty Group South Africa. So I will hand over to Akhona to lead our discussion. I will ask all the panelists to have their mics and videos on, and then we start our conversation today. Akhona, over to you.
Thank you, Zenzele. Such a pleasure to be a part of this panel discussion. I am not sure, and I'm talking about technology, and I am not sure how to switch on my camera. So it seems like it's been blanked out. So if you can't see me, it's not because I don't want you to see me, it's because I do not know how to make you see me. But I'll keep trying, and I'll just improvise as we go along. Thank you very much to the Fintech Summit for introducing me, for including me as part of this panel discussion. Super excited to be sharing the stage with Josef Langerman, with Samet, Varlik, Camilo, Amarcy, and Aditya, who has joined us. So we will be tackling digital transformation post the pandemic, and I'll just be asking a couple of questions, and yeah, let's just see how it goes. So let me actually just give the panelists a sentence to introduce themselves and what it is that they do, so that we're all familiar with who's who in the zoo. So over to you, Camilo.
Thank you, Akhona, for this opportunity, and Zenzele as well. Well, I'm Camilo from Mozambique, and currently I'm the head of data analytics and strategy for Absa Bank Mozambique. My role is mainly to manage the people performance using data in order to support to see exactly if they are on track or not. But I do think that my passion inside this business is mainly to understand the trends of the customers and the products, mainly by using the data to see what is the behavior and what we can learn from this behavior to create some improvements within our products and services, all based on data. So it's a nutshell. It's what I do in my daily basis, which there is this foundation of understanding or managing the AML that was already, but I think it's pretty much what I do on this side.
Wonderful, thank you so much. Josef, if you could just give a brief introduction as to who you are and what it is that you do. Josef, are you there? Okay, we'll move straight to Samet, just in the interest of time. If you could just give a brief introduction as to who you are and what it is that you do.
Sure, thank you, Akhona. So my name is Samet, and I am the regional sales manager at OneSpan. actually based in Belgium, and I manage the South and East Africa remotely since 14 months now. So not easy to do all it in remotely. But so we provide digital security solutions for banks, financial institutions, and insurance companies, etc. So I'm really excited to be here and to have this discussion with you.
Wonderful. Thank you so much, Samet. Aditya, if I could ask for an introduction from you.
Sure. My name is Aditya. I'm president for Corridor based out of India. My primary role is around helping build our foundational assets around the product R&D team and also client servicing. The firm is headquartered out of New York, New Jersey. I spend quite a bit of time with clients. So front end, from a digital transformation perspective, I see the challenges in banks in developed markets and also developing markets. So this will be as much of a learning experience for me as I can hopefully provide some insights. In terms of the firm Corridor, we are primarily in the business of speeding up decisions for banks in compliance as they further deepen their inroads into digital transformation, right? So that's the net of it. And we believe that the same thing applies hugely in the pandemic environment we are living in now. So being able to manage decisions flexibly and nimbly with COVID data and other forbearance and payroll data, and rapidly evolve your strategies as your client dynamics move and your marketplace dynamics move, is essentially what Corridor plugs in and helps banks do. I'll be happy to speak about data, but thanks for allowing me to introduce myself and having me on the panel.
Wonderful. Great to have you on board. Guys, let's jump straight into it in the interest of time. So in 2020, the world experienced what we call a black swan event with regards to COVID-19. And in just a few months, COVID-19 brought about years of change in the ways companies in all sectors and regions do business, leading a lot of people to say that the recovery will be digital. So what does this mean to you? And this is thrown to every single one on the panel. The recovery will be digital. What does this mean to you? Anyone can speak.
So sorry,
I
I'll
think
go.
I think I can start on this point.
The connection is really bad, Camilo.
Yeah.
Yes. Okay. I was saying I can start in this. I think the recovery itself it's going to digital, but we just still need to look at the unbanked customers on the financial sector. There is a good portion of the population which are not inside this financial system, which even going to digital, it's not covering this kind of customers. So it's I truly believe that it's not only going digital, but it's mainly a combination with fintech, digital transformation, and also linking all that with data analytics to support the journey. So by mixing all that, probably is the next future for the step after the pandemic.
The pandemic. Thanks for sharing that, Joseph. Would you like to share your insights with regards to the question?
No, sorry for not being able to introduce myself. My whole browser dropped. But I think for us at Standard Bank, we positioning ourselves not only after the pandemic, but from now to be a platform and an ecosystem player. So the question is, how do you move outside of your financial services box and become a platform or many platforms and plug into these different ecosystems? And that has massive digital implications, because how do you become plug and play? How do you become as a service? How do you make AML a service, KYC a service? All of those things are the things we are pondering within the group. Thanks, Akhona.
Wonderful. Thanks so much, Samet. Do you have anything to add with regards to the question?
Uh, what can I add? Yeah, it's clear that the evolution of the digital transformation has been much faster with the arrival of the COVID-19, and the world was locked down, but the business had to continue. The banks that represent a crucial organization had to either follow the technology or die. And yeah, that's really important.
Great. So then you actually touched on one of my next questions, and I'll follow up with this question directed at you. According to McKinsey, the digital acceleration over the past year has increased by 7 years in some cases. So according to you, do you believe that we have the skills to match the significant acceleration? And what does this mean for skills development?
Yeah, indeed, that's a really good question. For digital banking transformation to be successful, there must be alignments at all levels of the organization. So technology is the foundation for this transformation, but even in the digital age, the human elements cannot be ignored. And digital culture comprises the shared values and behaviors that define how things get done in your organization. For most traditional banks, going digital starts with giving your employees and business leaders the decision-making ability to innovate and challenge the status quo to meet customer expectations. When done right, a customer-centric digital culture can drive the transformation needed to stay competitive in today's evolving banking landscape. And what I can also add is that now that most financial institutions have addressed the essential business continuity needs in response to the pandemic, there is a readiness to tackle the next set of challenges that touch the digital customer experience, including improving digital sales and digital services capabilities. And the good news is that banks and other financial institutions are using this time of disruption to reinvent themselves and accelerate their own digital transformation agendas to ensure that they stay relevant during and after the pandemic.
Yeah, thanks so much. So, Joseph, you had touched on Standard Bank's strategy, plug and play. You're using words like ecosystem, you're using words digital transformation. And what does this mean with regards to ensuring that the workforce of Standard Bank is up to date with what it is, with your North Star, and what it is that you're trying to achieve as an organization?
Yeah, that is a hard problem and it's a very difficult problem because what a lot of us do, and we've made this mistake many times, is we train everybody in one technology, or we train everybody in innovation, or we train everybody in design science or creative problem solving because that's what the latest BCG or McKinsey report says. But I think we're getting a bit more clever with this because a lot of what your skills need is dependent on what systems you have in your organization. If you roll out Salesforce, for example, you're going to need for this organization our size 200 or 300 Salesforce people. So then you do a targeted intervention around Salesforce. Another big thing to become plug and play is APIs and cloud. So we've rolled out massive training programs across our state to make people cloud ready and also teach them the fundamentals about APIs. So there's very specific technical training, but then what you also, there's a big gap for is digital leadership. How do you lead as a digital leader? Then there's things like design science, there's things like design thinking, there's things like agility, there's all of these things. So I think the mistake we made in the past is we treat everybody as a blanket and we should all do the same thing. But now we know if you're a CIO, we can work out a specific training course for you to make you future ready. If you are an engineer, we can do this for you. So I think a lot of it is context specific. And I think even our universities are cottoning on to this. I'm a professor at the University of Johannesburg in IT management or digital management. And a lot of people come to us now and say, we don't want your normal degrees. We want degrees that are geared for digital management and the skills that takes. So Akhona is a great question, and like most great questions, it has many answers. So I think it really depends. You guys in Liberty, who I know well, have very specific training needs, which will be very different to Standard Bank, which will be different to the training needs, for example, in Nigeria.
Absolutely, absolutely. Aditya, so we are in a world of digital transformation, but we're all doing this remotely, obviously because of the pandemic. And what does this mean for the ability to build something new but apart? How are we able to achieve this?
Sorry, could you repeat the last part of the question? My network broke a little bit. Yeah.
Not a problem. So we have this challenge of moving forward digitally, but we're not doing it together in the same place. We're doing it apart. We're all working remotely. We're all relying on clouds. We're all relying on individual infrastructures. We're all relying on ourselves. So what does this mean in achieving this common goal, but apart? How do we do this? How do we move forward in doing this?
I think one of the big things that we have noticed, and we try to also address that in our platform, is the interconnectivity between the different silos, right? So let me just take an example, because if I answer the question in abstract, it'll be an abstract answer. So if I just take a look at decision strategies that banks have in prospecting, underwriting, customer management, you've got data infrastructure teams, you've got analytics teams, you've got business policy writers, those who write strategies for banks, and all of them are sitting at home and kind of working on their individual silos. So what is required, and I think the previous speaker, I think, just talked about that, but Joseph talked about that, is the ability to interconnect these through APIs or connect them through interconnected nodes, which are in governance, in compliance, allow you to manage workflows. So glue technology that integrates stuff together becomes even more important, especially when you're working from home or working remotely. And the interfaces between different functions. So I put 3 functions out there, right? I put a data infrastructure function, I put an analytic function, and I put a business function. The ability for them to talk together through this integrated technology becomes even more important, with very strong interfaces between them, because you're not seeing them in the office. You're not meeting them in, conference rooms. You're having to do that all digitally without things slipping the crack or breaking. So the whole integration of the integration layers, whether they're API based or other technologies, is becoming even more. The middleware is becoming more critical today than ever before, if we need to enable an organization to serve its end customers.
Wonderful. Thanks for that. Thank you. Thanks for that answer. Camilo, so from an inclusion perspective, does the recovery will be digital? Does that philosophy apply for the cash-based economy and the informal economy? Do you think they'll be affected by digital transformation, and if so, how?
Well, you see, the group of people that was using cash for the normal daily transaction, I truly believe that the migration from the status quo that they were used to operate will take more time to change to a full digital scope. But I truly believe that fintechs can really play a good point in here. For example, solutions such as M-Pesa from Vodacom and so on, they can really create an inclusion for the ones that are outside of the financial sector to be somehow within a platform, and then once they grow, they can be onboarded in a proper financial sector supported by the banks. But all this process needs to be a joint venture activity between the banks, the financial sector, and even the government, also to motivate the companies to follow this kind of process. In top of that, I truly believe that the communication on this time of pandemic just became so much important than before, because before you could have just a meeting with everyone in a room, and you could even understand the silent with the room. Now you need to understand from your office at home to understand exactly what is happening on the other side of the continent. And I think once we clear this point of communication, any of how to recover to after the pandemic will be quite straightforward for me.
And then just a follow-up to that question, you spoke about, I mean, it's a socioeconomic issue. And I mean, that's why I brought it up, is because, you know, we look at digital transformation from a corporate perspective without really thinking of all the partnerships that need to almost like work together in achieving this. And I'm glad you mentioned government, and I'm glad you mentioned the almost like PPP type partnerships. Do we see those partnerships happening in order to facilitate the digital agenda?
Yes, I think now, yes. Yes, I see that now it's much clearer, and this partnership became much stronger, because in the when we spoke about the digital transformation, it was like another subject to discuss. But now is must to have, and everyone is really working together to find a common solution, not only for the financial sector, but even to fix education within scenario that we don't really know how to manage education within the pandemic. But I think the pandemic became like a common religion for every nation, where everyone can really understand the impact of the pandemic on their business and even on the country. So this could be a good starting point to move forward on this journey of digital transformation, to bring techs on board that were not able financial sector due to the all the regulatory process that were in the middle.
Great, thanks for that. And I mean, this is a very colorful panel. I mean, everyone is from, well, most of us, there's two of us from South Africa, one from Mozambique, one from India. And I just wanted to ask this as a yes or no question, and then we'll carry on. But just out of interest sakes, this is part 2 of this digital recovery question, right? What does this mean for accessibility and the cost of being online? Because in some countries, the cost of being online, the cost of internet, the cost of access to data is so high. So just to get an idea from all the representatives from every single country on this panel, is the cost to be digital expensive? Yes or no? We'll start with Joseph.
Oh, no.
No. Camilo?
It's maybe.
Maybe. Camilo, how do you feel in Mozambique?
Well, I think
just a yes or no. Just a yes or no.
Well,
is it high? Is it low?
Well, well, the answer will be yes, but the explanation is a bit different in terms of the context.
Okay, cool. So we'll leave it there. There's just quite a few more questions that I'd really like to get through. Yeah. Samet, is the cost of data, cost of access to internet high or low where you are?
Absolutely not. But I agree with Camilo. So at the first sight, you can say yes. If you see the price, you can say yes. It's expensive. But after the understanding and the knowing of what is exactly, you can immediately understand that it's absolutely not costly.
Okay, great, thanks. Aditya, just your view on that question.
It's my answer is yes and no, and I won't get into the details.
Okay, great. Okay, so it looks like everyone has something to say. Maybe we'll get to it after the questions are done, but it would be quite interesting to hear different perspectives of that question. So then my next question, Aditya, is for you. How will digitization affect company culture, socialization, and the way we engage with each other?
I think that's a very complex question because it goes from personality to business culture to company culture. There's just a lot of dimensions to that. But
Yeah.
I think one thing that there are certain trends in my mind. The trends are we are going to live in a hybrid world, whether you're in a developed world, a developing world, it doesn't matter. We are going to operate in a hybrid manner. The concept of all people going and working in offices at all times has been shattered, and I think for the good. I think it'll reduce carbon emissions if nothing else. So the world will gain from it. But what it does do from a fabric of interaction is the whole thing about body language as we talk about it, right? Or dressing senses or meeting dynamics are going to be redefined in the context of digital interactions. And that's good and bad. In some senses, just like anything in the world, there's never a clear yes or a clear no, right? In all of these, there will be some level of more meritocracy and access to everybody, a more diversified access, which is a good thing by race and gender. On the other hand, some of the subtle cues that help drive decisions, help leaders make assessments. I believe for founders and leaders to make assessments, those cues are going to be a lot more harder to find and a lot more harder to discern. So the interactions in the digital forum will have to be more, in some senses, more black and white, more explicit. There will have to be less unsaid and more said for these to be effective. And I think that's the conundrum, right? So I think that there are advantages that decisions might get more distributed. There will be more diversity, I believe, in the workflows, because now location is not that important. For example, I've lived in New York for a lot of years, and now you don't need to be in New York, right? For example, I could be sitting in India and interacting with top heads in the United States because of the Zoom calls and so on and so forth, right? So I think there are goods, but there are also some redefinitions of human behavior, of interaction, that will have to be done. And I think the human race is smart enough to figure it out. But I think this is, generally speaking, the right direction. But it does require recalibration and contemplation of how do you drive interaction effectiveness in a digital world, which is quite different than in the in-person world. Akhona, I think we lost you. I hope I didn't put you to sleep.
No. Sorry, I was speaking on mute. I was speaking on mute. My apologies. But I mean, I really think that was a really, really great explanation, which brought something that we really need to think about, is how we as humans are going to communicate moving forward. And I agree with you. It will have to be a lot more direct and a lot more black and white. And I think that's some really, really good insights. And these are the conversations that I feel like we're not really having with regards to how to move forward, especially working remotely. So that's a really, really great response. Thank you so much. And I just wanted to just switch it up a bit and pose a question to Joseph. With regard, and this speaks more to the cybersecurity. I know you and Camilo are in banks, but this one is really directed at you. And I just wanted to understand that now, with all of this sensitive customer and company data literally now vaulted in what we know as clouds, what does this mean for cybersecurity? Do we have the capacity to look after the sensitive data information that is floating around in the cloud?
Sure, that is a good question. And I actually think we are better off in the cloud than off the cloud. And let me explain why. If you take Azure or you take Amazon or one of the big players, the only thing it means your infrastructure is in the cloud. So your hardware, your tin, all of that network. Those things are looked after by some of the best in the world, who have also the capability to hire better than what we can hire, for example, in South Africa. It doesn't mean your data won't get hacked, because all of the controls, all of the DevOps tools, all of the tooling around it, it's still yours. But at the bottom layer of the network, the tin, the physical machinery, I think we're actually safer there than if we had to try to do it ourselves and to hire the skilled resources to do it. And yeah, I think that's the long and the short of my answer.
I'm on mute again. Samet, so this is for you. I just wanted to just take you back to last year when we were introduced to hard lockdown and we had to almost like scramble to find the infrastructure to work remotely. Would you say that this was a smooth transition? And if it was smooth, then why were we not doing it earlier? Why did it actually take a pandemic to get us to explore this new way of working? Samet, I think you're on mute.
Sorry. Yes, this is again a good question, because there is a difference between before and now, and how to explain that. It's difficult to explain in a few words, but what I can say is, yeah, before we were not ready. That's the first point. So, or I should perhaps say we were not aware of the seriousness of things. On the other hand, when human beings are obliged and have no choice, they are capable of much. When the fraudsters played their game and trapped thousands of people, things changed. And the financial sector, state and federal government agencies, as well as consumer, are being targeted with various types of fraud and identity theft and data security breaches during the pandemic. The COVID-19 pandemic pushed banks and credit unions to fast-track digital transformation plans, and many banks have navigated this transition successfully. However, the pandemic has exposed shortcomings in both security and technical infrastructure across the financial sector. And you know, cybersecurity threats and frauds have surged during the pandemic. And the increase in remote account opening during the pandemic also means that banks have increased their use of digital identity verification solutions, for example, that rely on biometrics like facial comparison technologies in order to meet KYC requirements.
Okay, great. Thanks so much for that. Joseph, if I could just direct a question to you, and that is, what should banks do in the short term to handle the crisis and to retain customers in your environment?
I think, again, each bank is different. And I think what we are, as Standard Bank, our spend currently is mostly on infrastructure and the resilience of it. Because what happened with the pandemic, suddenly there were many, many more people online, and our network started to take strain, and our call it infrastructure started to take strain. So I would say resilience, infrastructure resilience, software resilience, all of those things are big. And coupled to your previous question around security and all of those things, I think where we've spent so much in the last couple of years on, call it activities, new projects, new products. Sometimes our resilience of our systems and our uptime of our systems haven't kept track. So I would say if I were in the unenvious position of being a CIO of a large bank, I would keep a close eye on resilience and making sure that the infrastructure can handle all of this, call it new digital traffic that is happening.
Great, thanks for that. Camilo, I'd like to direct the same question at you. However, I just wanted to put a bit of a spin on it. And this speaks to almost the what do banks do in the short term to retain customers? But now I really want to speak more to the customers that are really dependent on branch banking. Do banks continue servicing them in the branch, or is it a way of, or should banks try and get them to be digitally connected to their finances as opposed to relying on a branch?
Well, I think most of the banks they didn't close the front office, the branches, or at least if there was any closure, it was just for a short term, usually during the COVID tests. But I just realized that it's just changing the conversation when the customer goes to a branch, and instead of just selling a specific product, you could just start asking if the customer has a mobile, if the number is updated on the system, if he's already have the digital application, how we can use the digital application as well. So this literacy that we can just expose the customer is pretty much the starting point to evolve him from a customer that used to go for a branch. Probably he doesn't even need to go to a branch, but is the trend that is putting from the past actions that it's normal to go for a branch. But once he starts using the digital platforms, understanding that he can pretty much do everything by staying at home and do all the payments from the premise or from home. I think it's is the point that the customers will just perform this shift from the front office to the digital transformation. And it's not only activity from the people from the front office, but also from the entire company, such as putting marketing to announce the new facilities that we have, and also train the staff to speak with their colleagues and friends. So because if you just realize that one people can really impact, at least in terms of communication, up to 5 direct people, and within a company with pretty much almost 1,000 employees, we can really create a massive impact just with the direct communications from the employees to their families, and then it can create a massive impact on customers as well.
Great. Thanks for that. So we have run out of time. We are officially at 16:56. I just wanted to take the time to thank our panelists, Josef, Camilo, Samet, and Aditya. It was really, really great having this conversation with you. Thank you for the insights and the preparation for the session today. And I just wanted to apologize for not having my camera on. It's not because I didn't want to, but it's been grayed out. For some reason, AirMeet doesn't have access to my camera. So that is why it is off. I do apologize for that. And I was trying to get it on, but I was not succeeding. But yeah, on the behalf of the panelists, thank you to Fintech Summit. Thank you for having us. It really was a pleasure to spend the last half an hour with you. And yeah, have a great rest of the summit. Thank you.
Thank you, Akhona.
thank you so much to the
Thank you.
panelists. Thanks to Akhona and the team for the wonderful discussion there. It's been a great afternoon, learning from different perspectives. You've got different representatives from Belgium, India, Hong Kong, Austria, Australia, just to mention. So we have been hearing from different perspectives, of course, from Johannesburg and locally, and as well as across Africa. We were grateful, and thank you to our partners and the sponsors who have made the event possible. OneSpan, thank you. Doctress, thank you to Nona. Thank you to Gift as well. We indeed grateful, and definitely the conversations that we're having here, I think there are conversations that need to be carried forward, that we need to even engage further and transform. We don't need to wait for another pandemic for us to adopt these digital transformation strategies or adopt these technologies. We going forward, absolutely, I do not think there's any doubt that we need to digitize. Thank you so much again. We really appreciate. May you all have a wonderful day further and evening, and yeah, thank you so much. Cheers.
Thank you.
Thank you, yes.
Thank you, Zenzele.
Thank you, yes.
Great stuff.